Hey guys, it's Jim from AccurateForexTrader.com. Just a video I promised you regarding looking at a bit more aggressive on this SAR with a mechanical system. Here we have the Euro AUD 4-hour chart. It's one of my favourite pairs, as you know by now. It seems to trend pretty well. Here's my lines, my four yellow lines, red line and blue line. I've set it up on the left here. Assuming that we've got a stop hit this level here and we've got an entry at this level, so we're going up this way, so we're long at the moment. Alright, now what I've just done is added my favourite indicators here. I'll get rid of the indicators in a minute. I just want to show you what they are on the chart. MACD platinum down here, basically long on a blue dot, short on a red dot, but it has to go in hand, sync with the QQE. So when you get across from blue through orange and it coincides with the blue dot, gives you that green arrow on the chart there, and you can see even though we've got a red dot there, the QQE is still long. So it's not until we get across on the QQE, which confirms that a red dot, that we get that short. So all these arrows do is show me where these crosses take place. So what I'll do is I'll get rid of these. Now I just want to put the arrows on the chart just to see if it makes any difference. Alright, we'll just run through a sequence here. I've deliberately picked a sideways movement, so see if I can jam in the stops a bit quicker. Now I'll just explain what I'm doing when I'm going, so I'll just start the lines moving so we get this video going. So now we're long, obviously. Our risk is between the red line and the blue line as per normal. And it's a pretty good uptrend to start off with, so we'll just ignore it. Right, there's a pretty obvious breakdown through the, so there goes our, that's just following the normal rules, so no problem so far. Now the way I look at it, we've got a green arrow here, so it's definitely an uptrend, so we can give it plenty of room to breathe. And we're up, still going up. Now this is where we get aggressive. Now see that this pullback here, by the time I move that yellow line up, that pullback has happened inside the four yellow lines. You want to get aggressive, and it's an obvious pullback after the event. I would bring it up there. That's just been a little bit more aggressive, a bit more full on. Now we'll just go up. This is where the discretionary trading comes in. Now as you can see, we've got a red arrow, so it's, I would say, well, we'll go into the downside now, and sure enough it takes out my SAR, so we've got a changeover. Now let's have a look here. That was on that spot there. Where was it? There, sorry. Now get rid of these yellow lines so that confuses us, so we can have a good look at the picture what we've got here. So we're short, come down, we've got another one low there. Now we've only got two yellow lines in play, and we've got the blue line. Now the way I used to look at on my previous experiment with this 4-hour chart is I would consider that to be enough. Is if those other two lines aren't in play, but I've got a blue line, two yellow lines, and it broke out through them and down, I would be moving my SAR to that level there. It just reduces my risk. As I said, I'm out to reduce risk as quick as possible. And we've, as you can see, come down and gone up. It's come close to going through the blue line, but it hasn't. Gone through there, and now we've got all four yellow lines in play, so it's as per normal. It's come up and down. There we go. So it's come up and gone down. Now look at that. Look at the risk we've reduced. There's a small gap there. You can see what happened now. We can see to the right. So we're going long now. So that was a very small loss, which is good. And we've got that green arrow too now. Now I just got these arrows on here just to give me an idea, see if it's going to help at all. Right, there's another one up there. Now again, see our price has got up, then come back down through. There's two yellow lines in play only, and the blue line, and it's gone back up. Again, I'd be putting that up under there. I'd be comfortable doing that. Reduce the risk greatly again. So even if it does turn, I'm not going to lose much, which is not such a bad thing. Right, we're going up. There's nothing real obvious there, and we've got now we're normal. It's come down through the 4 lines as per normal. Bring it up there. Nice big move up, which is good. We've still got a green arrow, so you can assume it's still an uptrend. Now here we go. We've got a as per the normal rules, bang, it just comes down here through and back in. Great opportunity to move that SAR up. Great opportunity. And short time later, as you can tell, we're going short. So all we're doing, all we're doing on this video is getting a bit more aggressive on our moving the SAR and reducing risk. That's all we want to do. And especially in a sideways market, it'll help a great deal. You might have a lot more trades, but it'll just get rid of those big losses. Now, even if you want to get tricky in here, see prices come down, technically it's broken up through and come down again. You could bring it down to that level there. We'll give it a run, we'll just put it there. I can see anyway, because I can see to the right of my chart. And it's gone up and through. So again, risk is greatly reduced. Got a red arrow. You could use any indicators you want. It's up to you. I'm just using mine, and this is probably very discretionary, and it's easy to see after the fact, and I can see to the right of my chart. So it's probably where are we there? See, price has got up there, come down, and popped up again. Yeah, I would leave it at because we're locked in a trade. We've got profit locked in, so it's no big deal. It's getting pretty tight in there. Alright, we've got 7 minutes. So basically we're looking for anywhere. Now, if you want to tighten it up, you could bring it down to this level here, because there's like an obvious pop up and down, and it would give you that nice run up. But we'll just leave it where it is. Now, as we've got a green arrow here, it's going up, it's gone up through the lines, and it's just popped down a bit. With that green arrow, I'll definitely bring that down there. Alright, so now we're long. Probably not as good a trade as we could have got, but get these ones out the way just to clear it up a bit. So we've got a green arrow, we're long, we're heading up. So let's just see how it pans out. Touch and go whether it comes through the blue line there or not. And we have a red arrow there, then it turns back in. So let's just tighten it up there. Even though we've got a red arrow, so we're assuming it's going to the short side, but these obviously indicators, like any indicators, are not perfect. Price has gone up, come back down, gone up, so we could probably move it up a smidgen there. All I'm trying to do is look for spots to move that SAR. Doesn't have to necessarily be within the 4 rules, as explained earlier. We've got a green arrow, so you think we're going up, but it turns pretty quickly, comes down, and we're back short again. So not much there at all. Get rid of that one up there. So we're short. Now, here's a good example. Price has come down and gone up through there, still up through there, still up through there, still up through there. We get that down candle. That for me would be a SAR point if you're being aggressive. And down, and all it does is reduce that loss. And even though if we'd stayed within the rules there, this wouldn't have been an issue, and we wouldn't have had that reversal. Say, there's your trade-off. That would have still been short, and we would have got that run down there. But who knows with that one coming back up. Let's just assume a long here. So we've got extra trade thrown in there now because we were aggressive. And let's see if we got a position to. No, it's gone up. It's come down. It's gone up there. Maybe you could have put your SAR into that spot. You could have put your we've had that poke back up into the blue yellow line area. Could have put your SAR there. Didn't last long, bang, straight through. So there's a loss there. So we'll bring that down. Red line there, blue line there. Just running out of time now, just rushing through it. Alright, so we're on that low there. There's a nice little poke up there. If you wanted to, you could bring it down there, get rid of that risk. And all it does, even though it goes through there, you're still locking that little bit of profit. It makes up that loss we just took. And as you can see, we've got a green arrow there in a way, and we're off again. So on that, where the entry was basically. It's a bit of a mess, but it's a bit more discretionary, and it got you through this sideways action here without too much grief. Just instead of using all 4 lines and following the rules like I initially laid out, just use the minimum amount of lines and look for obvious spots for new lows, new highs, and combine it maybe with indicators of your choice. And yeah, if anyone wants these indicators that I use, just let me know and I'll put them on the forum for you. Alright, just about to hiccup, so thanks for that. Talk to you soon.